What the fuck is good, you little fucking cunts? Welcome back to another video. Today is a trade recap analysis again. Let's jump into it, all right? I'm going to make this quick again because I know you little fucking bastards don't like to listen to my videos at all. That's all right. That's all right. I don't give a shit. I don't do this for the money. Key levels here. We have not only one liquidity down here. Okay. Look at that. It's already marked. Oh my God. We are just so fucking good, aren't we, at fucking trading? First thing to notice, we have this daily imbalance fair value gap here, as you can see from the daily. Actually, let's go to the weekly. Weekly, we're bearish. Okay. Daily, again, we have this fair value gap. I didn't even know we were going to target that. What I did know was we were going to target this. What is it? Swing low, most likely targeted sell side liquidity. And when did I mark this? I probably marked this the fucking 12th, and we finally targeted it. So I was right. My bias was right. Talking about bias, we also had this 4-hour swing low. Need to mark that because on the 4-hour, boom, bam, what do we got? We got a nice ass lease swing low. Okay, let's jump down to the 1 hour so it's a little more revealing what's going on. Today is the 19th of Tuesday, okay? If you guys paid attention to the news, we have Monday accumulation, we have Tuesday accumulation. So Wednesday tomorrow is FOMC, right? So we have news tomorrow, which means that the accumulation is going to be pretty big for FOMC, and then we have unemployment claims, which comes out Thursday, and then Friday is PMI. So 3 red folders in a week, big news. If we go over the chart levels, right, we have, what is this? It's not a 4-hour, okay. It's a 30-minute fair value gap, which we tested here, then we rejected. Not only did we create an order block here under this fair value gap, 19th, we opened here, daily open, right? We have this sell side liquidity down here that was taken for pre-market buys to get sold, bought, whatever. All the way to this order block gets rejected in that area pre-market. That gives me a good analysis that, okay, this is we're gonna sell today, right? Because not only do we reject once, twice, but we are very likely to reject this again. Obviously, order block created more order blocks. We have this liquidity that's gets swept. We know we're going down. This is all pre-market. Like I said, pre-market. Pre-market, we create this at 8:30. We create this imbalance fair value gap, which I marked out. And I don't know if you can see very well. You probably can't. Let me just put this so you can see. This was the trade I was going to take. If you can see, there's a lot of levels to take action here. But you have to remember, we had a liquidity, and then we had a market structure shift. When this happened at 9 a.m., I was like, okay, the market is gonna dump, but I want to have an entry on this. Now, where was my entry? I was like, okay, well, my entry, right? What does it do after a market structure shift? As we know, it creates imbalance. What's imbalance? It creates displacement. What's inside the displacement? It's imbalance. It's fair value gaps. It's order blocks. It's a bunch of stuff. And I'm looking to enter off the consequent encroachment of a fair value gap, which is here. This is my fair value gap, and what I didn't realize is it actually created a smaller fair value gap, which it actually filled here and then dumped. My entry would be up here. So if this candle only touched up here just a tiny bit, I would have entered this trade for a nice 12-to-2 risk to reward ratio trade, and it worked out perfectly. Not only targeting two order blocks that I had filled out here, because just think of it as a big fucking order block. We'll just target this bottom one. One order block targeted here, taken out. One sell side liquidity taken out, swept. Now, when I saw this, I'm like, okay, this is going down to the 4-hour low. When it swept 4-hour low, I was like, where is this going? And I'm like, oh yeah, this swing low down here. So I swept that, but I did not know this was going to come down to this fair value gap. I thought it was going to bounce off. When I saw this bounce off, I'm like, okay, this makes sense. But it bounced off, I guess, came in this little fair value gap here that you can see right here. If you guys can't see, I'll mark it out for you right here. This little fair value gap came back down. Consequent encroachment of the daily and fair value gap. Boom, came back up. Where? Fair value gap that we should have entered on. Isn't that funny? Let's talk about discount in premium. I know Keegan is watching this thinking this is a joke, but I'll tell you exactly why it's not a joke. You see this swing low that we had pre-market, so you mark this out, right? Swing low. or swing high, my bad. And then obviously you don't want to mark out the whole session. You just want to mark out what I had. So pretend that this is like 9 a.m. I'm watching the chart. So this whole part right here is not available quite yet. I only have this. For me to take a trade, I'm going to mark the swing high up here and the swing low, the current swing low. So the current swing low is here. Put it on the side just so you guys can see better. And then swing high is up here. Okay. The green area is the premium. This is where you want to enter short. The red area is where you enter calls. So when you have this current swing range, right, swing high to swing low, current swing high to swing low, that means that price, right, off my entry would have been in the premium, right? Look at where my break even is and look where my entry is. It's in the premium. It doesn't matter if it's like point off. It's in the premium. If it's up here, that's perfect, right? If you look at this, the swing low, this would have been perfect. But let's say I actually, yes, I could have taken puts here, down here, right, for this, even if it's in the discount area. But this is a whole new candle. So that means I had to mark out the new swing high and then the new swing low, like this whole thing, right? I wouldn't personally take this trade. Like it's a good trade, but you really don't know until you do the discount and premium. This also works, if you have OTE. So I guess like swing high to current swing, was it swing low? I mean, OT doesn't really do a lot here. Yeah, OT didn't really perform. I mean, I guess you could do swing high or swing low to swing high. And you could see that this, oh yeah, look. This is kind of blocking by the fair value gap, but if you look at the OT, this yellow line and this 0.6 actually like intervened very well for a nice little reversal. So I should have actually taken OT entries. What a dumb fuck am I, right? I'm fucking dyslexic little Frenchie, huh? Such a dumb fuck. All right, it's all right. It's all right. What I'm happy about is that the bias was right. I mean, if you just look at this, actually, let me look. I'm proud of this one fucking thing. I love to do this every day. Is guessing. Not whoa. Guessing? Did I just say guessing? No, we don't guess the bias here. We fucking know the bias every single day because we're like that, right? We're called hashtag Lee traders. That's what we're called. We're called Lee traders. Inside joke. I'm going to show you my fucking notes in the morning. I took a photo of the potential trade and the potential bias after the market structure shift. And I, in my notes, have this, which are currently loading up. Give it a second. And I was like, okay, this is what's going to happen. And guess what happened? This is exactly what happened. Let me load this up for y'all. Give it 1 second, if you will. Please just look at this chart currently, 30-minute. Let's actually dive down to the 5-minute just so you can see more of the entry. I mean, just see it respected this fairly gap very, very well, right? Didn't tap into this, which I would have hoped for, but that's all right. When you see this on the 5-minute, like this is pure rejecting. This should have been an easy trade, but I didn't take it because of my risk to reward and all that. So let's take a look. This is my notes, right? This is 8/19, yes. So 19. This is today. Right, and you can see there's no trade recap. You look at the bottom, there's no trade recap. This is just live charts. At live chart at 9, look what I had. I had this fair value gap already marked out, right? I had targeting order block. I had this market structure. What I thought was, okay, fair value gap here, prices hits this order block, market opens this candle, pumps up to here, rejects, comes onto this swing low. That was my thought. What happened? What happened was, oh yeah, this is my thought, right? So boom, opens at this order block. It actually, wait, is it the second? Where is it? First? Oh yeah. So it actually swings down to the second, almost sell side liquidity. What does it do? Right, it goes even further. Yeah, so I guess we're on the 1 hour. Yeah, so 30-minute, it comes up, sweeps, 1 hour, it gets taken out. But the bias was right. The trade was there, right? You can see the before and after. You can see I'm proud of this. This to me is a masterpiece. This means that I'm not only getting better with my bias, but I'm also getting better at taking things slowly, pre-market, understanding where the market direction and market structure is and how to play it, right? Because every day is different. With and without news, the market will change. The market is changing every single day. Price is there. Price won't be there tomorrow, And it's just like, where is it going to go? Where's the draw on liquidity? Where's the external, internal liquidity? Where are those fair value gaps? Where's those order blocks? Where are the banks entering? Where are they leaving? Where are they targeting? What is going on? So many questions, so different things saying. I'll see you guys tomorrow in the next video. I'll hope you that tomorrow.